for Morrison's, what kind of number gets a deal done, and who actually is going to wind up being the buyer?
Yeah, that's a great question. I mean, if we consider that the shares are 35% above their undisturbed share price on Friday close, and even that isn't enough to get management to accept this bid, I would say we definitely need to see a share price higher than this. In terms of valuation, though, if we look at the Asda bid, which is a close peer, that valued the company at about 6 times EBITDA, which is exactly where this deal is valuing Morrison's at as well. That said, I think the scarcity premium on these types of assets has gone up. Morrison's is also distinct in that it owns 85% of its store estate versus its other peers owning about less than half of theirs. So I do think the discrepancy between the value of their property portfolio and their undisturbed market cap is what will drive the need for a bid to go higher, probably another 10 to 20% from here.
This does feel a little bit like a short squeeze, though, and you can see that rippling out across the sector. This is a sector that has been shorted recently. I look at what's happened with the others today, Tesco trading higher, etc. I'm wondering whether or not this is a wider sector story or whether it is something purely about Morrison's. Why are the other stocks up? Could there be bids elsewhere?
I do believe the rest of the sector has traded somewhat unjustifiably higher in response to the Morrison bid, which is very distinct and unique to the Morrison story. So I don't really see the risk of a bid being replicated for either Sainsbury or Tesco at the moment. But as you correctly point out, these stocks have been heavily shorted, particularly Sainsbury. These stocks were somewhat darlings of the market last year as they were heavily defensive. Food retail, clearly one of the only areas during the lockdowns that was available for consumers to avail of, and they did extremely well last year. Since the rebound of the cyclical trade, these stocks have suffered and lagged the rest of the market. So I think this is a bit of a catch-up in response to the fact that they were shorted during that period, and I don't think it reflects fundamental appeal of those companies necessarily.
So what are the economics right now of these big supermarkets?
Well, I mean, they operate on fairly thin EBITDA margins, about mid to high single digit EBITDA margins if they're attractive. This is not exactly a growth sector. What it is a much more cash generative, steady returning sector. And if you consider that their assets that they're sitting on are this property portfolio, where there could be room to monetize some of this, generating pretty steady returns, that's exactly the kind of asset that private equity is drawn to, which explains the appeal of these businesses, not necessarily to a growth-minded investor or a cyclical investor, but to private equity.
The Isa brothers, who took over the Walmart, then owned Asda, obviously made their money on petrol forecourts. This private equity company that's coming in here also has a similar development in petrol forecourts. Is that the bet? Is that the connection here? Is that what you think is the commonality in terms of the link?
Yeah, there's some resemblances that are quite uncanny to that deal for Asda, which is exactly, as you point out, the forecourt operator also being owned by the private equity company. Another coincidence is that the private equity firm in question is being advised by the former CEO of Tesco, while the current CEO and chair of Morrison's are former Tesco people that he had worked with. So there's definitely a story emerging of possible synergies and a similar playbook that could be adopted to what was done with the Asda deal, should this deal go through. But Morrison's appears very firm right now in stating that this is not the price at which a deal gets done.
I know you mentioned it's not an easy switch, like if Morrison says no, that all of a sudden there'd be another bid for the company or another bid for the private equity people. But where else might we see some M&A in the sector?
I think Ocado is an interesting name, considering that has also, following a stellar 2020, lagged the market this year. There could be definite value to spinning out the Ocado retail joint venture that some activists might get involved in, and that could definitely be an interesting play. If we think about Amazon having bought Whole Foods, and taken the market by surprise in the U.S., perhaps they could be want to enter this market via a bid for Morrison's, although historically Morrison's has ruled that out.